Welcome back, and what in the Bitcoin is going on here? Core Scientific announces an agreement in principle with key constituents in its Chapter 11 bankruptcy case, and as predicted right here on the channel, Core Scientific appears to be exiting bankruptcy. We're going to discuss what that means for the stock, what that means for the crypto ecosystem, and, from an investing perspective, what I think is going on here. We're also going to be discussing Cardano redistributing over 650 million ADA. The bottom is behind us. The Treasury is borrowing another $1 trillion and much, much more. We got a lot to discuss in today's video, but first, make sure you guys are subscribed to the channel. That way you never miss a new video. We upload every single day of the year to bring you the latest happening in the financial world. So hit the subscribe button, turn on notifications, and do me a favor, give the video a free thumbs up, because thumbs up are free, but crypto and Bitcoin are definitely not. And neither is running the United States. According to the Treasury, they're going to be borrowing another $776 billion in the final 3 months of the year. And you know what that tells me? They're actually going to be borrowing a lot more than this, because we know that the US has a budget deficit problem, a spending problem. We're now in 2 proxy wars. And the spending is going to accelerate. The debt issuance is going to accelerate. You can see in the top left corner of the screen, the U.S. national debt, $33.685 trillion, and continuing to rise at a very, very rapid pace. But meanwhile, they're just like, oh, it's not a big deal. We're just going to be spending another $776 billion. In a closely watched announcement, the U.S. Department of Treasury said it's going to be looking to borrow $776 billion, which is below their $1 trillion in privately held marketable debt that the department borrowed from July to the September period, the highest ever for that particular quarter. The borrowing level appeared to be somewhat below Wall Street estimations when the Treasury announced in July their heightened borrowing needs. It set off a frenzy in the bond market that saw yields hit their highest levels since 2007. Stocks lost some of their gains, but still remained positively strong after that announcement. Now, officials attributed the lower borrowing needs to higher receipts, which were offset somewhat by greater expenses. The Treasury said it expects to borrow $816 billion during January through March of 2024, which is the government's fiscal second quarter. The number appeared above Wall Street estimates. The record for quarterly borrowing happened in April to June in 2020, when borrowing hit $2.8 trillion. Now, that was the beginning of the pandemic. We're not in a pandemic, but we are in another crisis that they're going to be spending and spending and spending. So any estimations that they make, it's going to be wildly, wildly higher than what they're saying, in my view. And so what does this mean for the markets? Well, there's a lot going on here, especially in crypto. People are front-running the Bitcoin ETFs. People are front-running the halving, and people are front-running quantitative easing. This according to Econometrics on X or Twitter. And I agree, right? What do I always tell my viewers, right? What do I always tell you guys? The real investors and the real speculators in the market, they don't buy the rumors, sell the news. They buy the news and sell the event, right? Like, we know what is happening already in crypto. We know that there's a Bitcoin halving coming up. We know that there's going to be new coins launching. We know that there's going to be a rush into metaverse gaming and AI cryptocurrencies. We know that there's going to be narrative-driven price pumps in the market. We know that there's going to be, moves to the significant upside and also moves to the significant downside. We know that there's going to be toxic maximalism. Like, we already know all these things. And so the ETF is coming, and people are still like, well, let's wait until to see what happens. It's like, BlackRock's not waiting. They're buying now. And so we know ETF's happening. We know halving's happening, and we know the Federal Reserve is going to reverse course at some point. When that's going to happen, it doesn't really matter. We just need to be prepared for it. He said that's a lot of people finding good reasons to buy Bitcoin right now, but is that expecting too much for the next 12 months? What if something doesn't go as planned? They said, who knows? If everything works out just right, then the confluence of all these narratives will be a huge tailwind for Bitcoin. And so far, Bitcoin is on track. And he posted this, which is effectively, let me make sure you guys can see it clear. Yeah, so essentially this is the Bitcoin having, I know it's a little bit light colored, but I think you guys can see it fairly decently. Basically, this side, this axis on the chart, it says growth for the bear market bottom, logarithmic scale, and it's going by multiples. 1x, 3x, 10x, 30x, 100x, and 300x. And down here is years from the bottom of the market. So we're just about a year from the bottom of the market. That's where you see this little red dot. That's where we are right now. And this is based on previous cycles. So sometimes I show you guys the Bitcoin halving tracker, which shows you from the date the Bitcoin halving takes place forward in the markets. But this is a very interesting chart as well, because as I've explained, it appears that these markets are moving in 1 year cycles, right? We know there's basically a 4 year Bitcoin cycle. 1 year bull run, 1 year bear. Well, I should say this: 1 year in bull territory where we're constantly moving higher. You could see that in previous cycles: bull market here, bull market here, bull market here, and these typically last within 1 year, right? It's not typically longer than a year. You could see that, and so that's the bull run. Then we have a year of downside, right? You can see the downside here, downside here. And this typically lasts for a year as well, where there's some peaks in the market, but most of the movement is straight down. And then there's years in between, right? 1 year on either side that are just kind of stagnant, maybe upside moving or downside moving, but kind of stagnant, not major moves in the market. And so what we see is going to probably happen sometime in the next year or two is moves to the upside. But as you can see as well, every cycle that we've had, the first cycle is the green, the second cycle is the orange, the third cycle is the blue. Every single cycle, the price movements to the upside decrease. And that's something that I've been explaining for a while, this phenomenon that these parabolic moves to the upside become less and less and less. And this is why you hear a lot of influencers or YouTubers talking about that 2024 is going to be the last bull market in crypto. While I do not think that it's going to be the last bull market in crypto, I do think that the expectations of returns from these crypto bull markets will decrease over time. Some of that is because of the Bitcoin ETFs, which are going to also help create derivatives for Bitcoin. So that way there's speculation on the Bitcoin price without holding the actual Bitcoin. This gives basically the more mechanisms you have connected to an asset, right? So think about stocks. You have, let's just take Apple stock because it's the most valued company on the history of the planet. And so you have hedge funds that buy into it. You have retirement funds that every week, part of their buy-in to their 401k is to buy Apple. You have Warren Buffett that's constantly buying. You have the ETFs that are buying. Then you have derivatives. So you have options, you have futures on the options on the futures, and spreads, and all these different types of derivatives that are built on top. And then you have derivatives built on the derivatives built on the ETFs, derivatives built on Berkshire. So it all kind of connects back to that underlying asset or underlying stock. And the more that is involved, the more, think about it like this, right? In crypto, right? Everybody is waiting for like a 5x. So the smart people, they know that everybody's waiting for a 5x, so they're going to pull out at a 4x or a 3x. Think about what happened during the Dogecoin situation in 2021 when Dogecoin was moving high significantly and was getting a lot of press attention, and Floki Inu and Shiba Inu, all of these were releasing, and then Elon Musk went on Saturday Night Live. Everybody thought he was going to pump it. Everybody thought it was going to $1. The speculators dumped at 70 cents. That was the peak of the market. They dumped, and that's when the market fell. Everybody thought Bitcoin was going to hit $100,000. We had laser eyes in 2020 and 2021. Well, the speculators, they dumped before we could hit $100,000. They dumped at $70,000, and that was the top of the market. So there's the more people that are involved, and the more money that's involved, and the more avenues to speculate on the price, that all has an impact on the potential moves to the upside or downside that these assets have. And so I do believe, and you can see it right here as we go through time, the movements to the upside in the Bitcoin price and also altcoins is going to decrease fairly substantially. But I remind you, if you can still get more than 4x in a cycle, I feel like you're already way ahead, right? Because The stock market, people anticipate between 7 and 12% returns a year. So even if you go on the upside, 15%, well, let's just say 10% a year, 12% a year. Over the course of 2 years, that's at least 24%. Compounding, it's a little bit more than that. Where in Bitcoin, it's every 4 years. And if you can get a 4x, you're getting 400%. So even if you multiply that return of 12%, let's say with compounding, it comes out to like 15% a year. So that's 15 after the first year, 30 after the second year, 45 after the third year, and 60% from your initial investment, 60% over 4 years. And in Bitcoin, if you could 4x, it's 400%, significantly more than you're getting in the stock market. Not financial advice. These are just my opinions. Do your own research and make sure you guys understand the risks involved before you make investment choices. Anyway, this guy on X, who is Heritage and Communications for Prosperity economist, said from Treasury, borrowed $1 trillion last quarter, expects another $776 billion in borrowing this quarter, would be miraculous since it borrowed $500 billion just in October alone, then $816 billion in Q1. So we're on track to borrow $3 trillion this fiscal year alone. As projected, interest is going to the moon. And this is a chart that shows the real federal, let me make it so you guys can see the both axes. It says real federal interest payments, billions of chained 2017 dollars quarterly, seasonally adjusted annualized rate. And you can see from 1947 all the way to 2020, parabolic move to the upside. And so this is how they're going to devalue the debt by inflating. And if you're not in inflation resistant or inflation wealth preserving assets, a lot of people believe this is gold, silver, real estate, and cryptocurrencies. You're not going to be able to retain that value. A lot of people, I remember in 2023, they were like, wait, Bitcoin is clearly not, or I should say 2022 in the bear market, people are like, Bitcoin is clearly not a hedge against inflation because the Bitcoin price has gone down while inflation is going up. I'm like, hold on a second. Bitcoin went from 2020, right before they started printing trillions of dollars. It went from $3,000 at the low in March of 2020 up to $70,000, right? Which is about a 25x. 25x over the course of 2 years while the inflation was happening. Because the year-over-year results that you get in inflation, that's 1 full year. So by the time people were realizing that inflation was not transitory, it was a year later after everything already inflated. Car prices, housing prices, and crypto and stock prices were inflating in 2021. That's where the market peaked. And again, the speculators got out of the market before the everyday person realized what the F was going on. Now, Stan Druckenmiller, who is a very well-known investor, there's 3 clips that I want to show you. He's talking about kind of what is going on here with the fiscal spending, and then he talks about Bitcoin as well. Now, these clips are not that long, but I'm going to play them a little bit on the faster side because, we don't want to be here all day. And by the way, don't forget to give the video a free thumbs up and also hit that subscribe button. That way you never miss a new video. And then after these clips, I'm going to show you what's going on in Core Scientific, one of my favorite Bitcoin mining stocks. And then we're going to talk about what in the Cardano is going on with the redistribution of 650 million ADA. Let's listen to what he says. Whoa. So essentially, he's saying that she's not being like fiscally responsible. She's not doing the right thing, by kind of how the treasury markets are working. The bond market is kind of like it's a little bit shaky right now, right? Without getting too much in depth. Now, he does also then go on to say that he's currently short bonds and long the front end. Let's listen to what he says here. So it's very interesting what he's talking about, especially if you don't really understand what bonds are. Like, what the hell is he talking about? Essentially, he's talking about the yield curve and where the bond market is. I don't typically get too involved in the bond market. You guys know I'm a little bit more focused on crypto markets and crypto specialized stocks. But it's interesting to hear because this is kind of goes back to what I was just talking about, right? These billionaires, they have companies and analysts, and the, they know exactly what's going on in almost every single market that we have, and they're in there buying, shorts, which is basically selling a stock that they don't even own to then rebuy it back at a lower price because they think the price is going down. And they're like in the markets, in these derivative markets, and they're also influencing what the market is doing, right? So it doesn't really matter like what we think, what we want, right? The large hedge funds, they're going to manage the market the way that they want. And I think that's become very clear over the last few years. Anyway, he then talks about Bitcoin in that same, I don't know what it is, conference or speech or discussion, fireside chat. And I thought that this piece was also important to understand what's going on. Because what he's saying is really echoing what a lot of other economists are saying. We just heard Jamie Dimon selling he's going to sell 1 million shares of stock, right? And the media is like, well, he's thinking about retirement. It's like, no, he's not. He was just talking about becoming president a few months ago. Like, he's not retiring to anything. So him is cashing out on JP Morgan stock when he hasn't done it for his entire time working at JP Morgan over 2 decades. I find it very hard to believe that it's just to sell, right? We've heard from Jamie Dimon over and over that there's economic hurricanes coming. We just don't know exactly what those are going to look like. And if we do have a financial crisis or situation at our hands, this is going to impact the banks, right, and their stocks fairly harshly, I would imagine, just based on the fear alone. And this could, be a good opportunity for Jamie Dimon to cash out at higher prices. But it is very interesting because typically when you start to see the billionaires selling stock, it's a signal, right? Because in 2021, Elon Musk started selling his stock at the end of 2021, and what happened? The market went down in 2022. So yeah, let's listen to what Stan Druckenmiller says about Bitcoin. Bingo, bingo. Not yet. Bingo. And what he's saying is exactly how these markets operate, guys. Right? The incumbents, the people who have been in the market for a long time, they don't believe in these newer things, right? Now, there are a lot of investors that do, right? A lot of angel investors, they see things before they become, really big. They invest in companies or products or brands before they become big, and they help accelerate them to, get to that higher level. And they basically see something that it's kind of like on Shark Tank. If you watch the show Shark Tank, right? They get all of these different companies that come in, and a lot of these companies have really smart ideas and really, good employees and good founders and investors, but they're not necessarily investable businesses, right? And so these large investors, they understand, like they know what's going on in crypto. They probably knew more about crypto than you guys did way before us. I mean, I tell you guys the story. Like when I first started learning about financial world and really like crypto, specifically like Bitcoin, I was like learning about like these very, very wealthy people who would hire companies, and then the company would hire bankers, like banking analysts, stock market analysts who worked at banks. They said, listen, we will pay you double your yearly salary to present to us why Bitcoin or why Ethereum and how much we need to buy. And they were doing this in 2015, 2016, 2017. And I'm pretty sure that there were like stories written about these very wealthy people who were doing this. And they would hire like 10 of these, banking analysts who worked for the banks, and they would pay them, $500,000 or 300,000, whatever double their salary was. And they would present to this company or to the families that, were the millionaire, billionaire families, like, hey, this is why Bitcoin, this is why Ethereum, this is why both. Here's how much you should allocate to the portfolio. And then they would make a decision based on the blended, understanding from those 10 different presentations or whatever it was. I mean, they, the very, very wealthy people have been, focused and understand what Bitcoin is for a very long time. Whether they invested or not, that's a whole different story, right? I mean, we see Jim Cramer, he bought Bitcoin and then sold it a few months later, and now he talks crap about it all the time. But meanwhile, all the other stocks that have been complete failures that they were pumping on his show, there's no discussion about. But Bitcoin is a scam, according to him. I mean, it's the younger generation gets it. I have never met anybody under the age like 50 who said, no, 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 Bitcoin's not going to become something, right? Like, it's really just the older generation. Oh, well, that's not really anything. It's like, your gold is not anything, right? Most gold is sitting in vaults and it's owned by governments. Like, what are you going to do with gold? And so this is a conversation that has to be had, because this has nothing to do with like where you live in the world, what the government thinks, what your political view is. This has to do with like your financial future. If they keep inflating and printing and printing and printing, which we know they're going to do, there's people who really believe that they're going to, oh no, no, they're trying their best to, limit spending and bring down the debt. Literally, there has never been a time in my lifetime, and probably yours as well, that the US debt has actually decreased. It has been increasing my entire life, and it's been accelerating. The actual increase of the national debt is accelerating at a very, very rapid pace. So it's not going to stop. It's not going to stop. And there's going to be a lot of people, guys. There's going to be a lot of people that are working for $50, $60, $70,000 today and think that a $50,000, $60,000 a year salary is going to cut it. And then, maybe a pension or whatever their retirement looks like is going to save them when they're at retirement age. It's not. Like, you have to protect your financial future now. You have to protect your retirement now. Now, whether that means crypto stocks, ETFs, index funds, or something else, I mean, that's a good question, right? We don't know where any of these markets are going to go. I do think that active investing is a little bit more safe than passive investing, because you can take a little bit more aggressive approach and understand and get in and out of the market rapidly if you need to. But, I mean, guys, day traders typically are not really trading every single day. Like, nobody's sitting in front of the computer for 8 hours while the market's open and trading. Like, it's just not happening. Most of it is done by setting limit orders. A lot of it is done algorithmic by computers and bots. So anyway, I got really off track here, but you guys kind of get the point. Now to my favorite topic of 2023, Core Scientific, the diamond in the rough. I was actually looking at my portfolio the other day, and I'm like, really, should I own Grayscale? Should I buy more Grayscale? Should I buy more this? Should I buy more that? I'm like, wait, like, why am I focused on what I want to do well versus what is doing well? And it has been very clear. Everything that we've talked about with Core Scientific is basically materializing. I actually looked at my portfolio the other day, and the first Core Scientific buy I made was, I think, September or October of last year, of 2022. Okay. That was the first time I bought Core Scientific. And that was before they filed bankruptcy. And then the stock went down. I think the buy price was around $1. You guys can see right here in like September, it was like $1, and then it was going down to $2. When it was at the dollar range, that's when I started paying attention to, like, why is Core Scientific going down so harshly? And then it went down even further than that. And I've traded this stock, but I also still own some of the stock that I purchased. And now Core Scientific it appears is coming out of bankruptcy. Now, I posted this a few weeks ago. It says October 28th, 24th is the next key date, but the actual next key date now, because they keep rescheduling, is November 14th. I said I would not be surprised by a $2 price when they do get out of bankruptcy, which will be a 40x from the December 2022 low of 5 cents. So remember, in December of this past year, the price went down to 5 cents. Some exchanges, it shows in January of 2023, it actually hit 4 cents, but we're just going to go with 5 cents. 40x from there is $2. And that would only really be basically a 2.25x increase from where we are today. Well, now Core Scientific has announced an agreement in principle with key constituencies in their Chapter 11 bankruptcy. They expect to emerge from Chapter 11 bankruptcy by the end of this calendar year. Guys, this to me, like, this is one of my largest positions. I continue to buy. I bought in October. We dipped down to 50 cents at one point. You guys can see that. That was in early to mid October. I continued to buy, and I bought today based on this announcement. Well, the day that I'm recording this video, you guys may be seeing it on a different day, because it was my belief that they were going to be getting out of bankruptcy this year, but it's becoming very clear that they're going to be out of bankruptcy very, very quick. And remember, they're one of the largest publicly traded Bitcoin mining companies in the world in terms of hash rate. They have over 5% hash rate of the entire Bitcoin network. Well, now Core Scientific has reached an agreement in principle with the ad hoc note holder group and equity committee regarding the terms in the Chapter 11 plan of reorganization. The agreement in principle is subject to finalization of the debtor's third amended Chapter 11 reorganization of Core Scientific, yada, yada, yada. The agreement in principle can be found on the SEC website. Now, effectively, this is what they filed with the SEC. This is a Form 8K. Now, I'm not going to read through the whole thing because it's very in-depth. But you can see here it says, they went bankrupt in December. They disclosed all of these dates. On October 30th, the debtors reached an in-principle agreement with the debtors, which the debtors expect to enter into with the ad hoc note holder group equity in the coming days. The restructuring support agreement, if and when executed by the debtors, the ad hoc note holder group and the equity committee, is expected to include terms consistent with those set forth in the restructuring term sheet. On October 30th, the company issued a press release announcing the restructuring term sheet. A copy of the press release we just kind of went over. The foregoing description of the restructuring term sheet is not complete and is qualified in its entirety by referencing yada, yada, yada. And essentially, they just go over like what the actual details of the of their agreement are. I mean, it's pretty in depth, and it talks about how much money they owe and then what they're going to do about it, like how they're going to repay the money. That was $1.5 billion. This is $80 million. And so if you guys want to read through it, you can either pause the video as I'm sitting on those individual pages, or you can go to the press release and click into the actual restructuring terms. But it looks really good. I mean, granted, they definitely have a lot of debt that needs to be repaid, but we're like literally about to enter a Bitcoin halving cycle, and where I am anticipating prices to go much, much higher. And just looking at the other large Bitcoin mining companies in the United States, like Marathon Digital, Riot Platforms, Hut 8 Mining, Clean Spark. I mean, there's literally so many. I'm so Bitfarms. I'm so bullish on Core Scientific. It's like unbelievable how bullish I really am. And so I keep adding to my position. I believe that if and when they get out of bankruptcy, we're going to go much, much higher in the price. It may not happen right overnight, but look at where their stock is valued at, $271 million. Okay, they mine 30 Bitcoin per day, approximately. So 30 Bitcoin per day times 365 days, it's about 11,000 Bitcoin. And current price is $30,000, $328 million a year, sorry. But they also keep in mind, if Bitcoin goes up to $100,000, that's over $1 billion in just 1 year in Bitcoin. And if it goes up to 200,000, that's $2 billion, and so on and so forth. And so Core Scientific, while they are losing money, they're not losing that much money, compared to what some of the, I mean, last year they lost $2 billion, but the year before that, they actually made money. But if you look at, like, let's say Riot Platforms is in a similar position to Core Scientific. Riot Platforms, again, right, they lost 500 million last year, and they had less Bitcoin mined, and they're worth almost $2 billion in market cap. And so I am very, very bullish about Core Scientific. And listen, could I be wrong on it? Absolutely. Could I lose the money that I'm putting in on it? Absolutely. But I think that it is a risk for my investment portfolio that I'm willing to take, and that is what I am doing. Not financial advice. Do your own research. Grayscale is entering an Ethereum ETF review process. As you guys know, they're going for the Bitcoin ETF. We may see an Ethereum ETF drop as soon after. And I would imagine they're probably going to try to convert all of their funds. They have about 15 funds or something like that for crypto. And I think that they're going to try to convert all of them into ETFs as we move forward. We're not going to go over this story. We're going to move on to the Cardano story. Cardano is redistributing 650 million ADA. And by the way, don't forget to hit that subscribe button, turn on notifications, that way you never miss a new video, and give the video a thumbs up, especially if you are a Cardano fan. So basically, the Cardano Foundation has, from my understanding, a few billion ADA. Actually, no, I think it's under a billion ADA. So probably around what this number is, 650 million. And a few years ago, Cardano Foundation started delegating to community stake pools to help some of the smaller stake pools grow. And what we are seeing now is that the Cardano Foundation has announced the successful redelegation of the Cardano Foundation wallets as of about a few days ago at the end of October. This marks an inaugural application of their revised delegation strategy, which has been diligently crafted. Oh, sorry, I wanted to pull that up. Let's pull it up in a separate window. And their delegation strategy has been diligently crafted to reflect their enduring ethos of supporting the architecture of the future. For each of these 30 stake pools selected, they have compiled an overview of exceptional contributions to the Cardano ecosystem. Now, previously, I believe that they were just delegating to, community stake pools. Well, it looks like last month they updated their delegation strategy, and each of the following changes are aimed at further improving the quality and effectiveness of their delegation approach. Now, let's just do the math on this. They have 650 million ADA that they're delegating out to 30 different stake pools. So they're adding about 21 or 22 million ADA into each stake pool. That's basically about 1/3-ish of the saturation point for Cardano stake pools. Maybe there's been a lot of controversy and some critiques that maybe Cardano Foundation should split it up even more and further outside, just 21 million ADA, and maybe do 10 million ADA, and they can double the number of pools. But that's for another day and another discussion. So here's their approach. Their delegation duration, instead of a short-term delegation period of about 3 months, they're going to move to an extended period of approximately 1 year, 12 months. The extended delegation period will benefit the operators, allowing them to really focus on their contributions. Whoa. So basically, they used to do 3 months. Get the pool up and running, get them, producing blocks, get more people into their pool, and then remove the delegation. Now they're saying 12 months. And the issue with this is they're only giving the opportunity to 30 stake pools a year, which is 1% of all the stake pools in existence. There's about 3,100 stake pools in existence on Cardano. You can see that on C Explorer. Right here, we have 3,129 stake pools that are in existence. So 30 of them is 1%. That means that the Cardano Foundation is delegating to 1% of all the network operators once per year. And so, I understand that there's, stake pools that are like, well, 30 days, 3 months or 90 days is not enough time. I get that. But maybe, again, reducing the amount of stake that they're putting into the stake pools would fix that. But the other issue is somebody has to manage all of this at the Cardano Foundation. And moving ADA and accessing wallets is risky, for any organization that's dealing with that much ADA. So this also may be some security concerns behind that as well. Anyway, delegation packages. They're going to reduce the number of pools they delegate to, which will increase the size of the delegation. This, combined with the extended delegation duration, will help enhance the overall quality of their selections, plus allow pools to flourish and establish themselves more effectively. The delegation criteria, they said they're going to remove single pool requirements, which will ensure greater flexibility in their selection process. The team will now handpick pools based on the data and insights they've gathered. This ensures that the delegation strategy is driven by experience and thorough understanding. They understand that greater delegation may tempt pools to raise fees. However, they want to clarify that if pools increase costs or raise fees, they may withdraw delegation. Previously, there were stake pools that would start up, and then as soon as they got the Cardano Foundation delegation, they would change their rewards to, their fees to 100%. So basically, the Cardano Foundation would get no rewards, no stakers would get rewards, but they would start producing blocks, and then the stake pool operator would just keep all of the rewards. It's a little bit shady, and Cardano Foundation would remove, this happened at least once, where they ended up removing the stake from the pool, saying that the stake pool operator was, operating in bad faith, which I would kind of agree with. So application process, as the regular delegation round will be replaced with extended delegation. They're going to change the application format to a single form. If you're a new pool or undertaking a novel initiative that you believe merits attention, use the form to submit the pool and apply. But again, it's only going to be once per year, which is the number of pools is going to go down from 46 to 32. And there's no deviation from the core strategy supporting the architects of the future. Cardano's Foundation's new delegation methodology. They want to support people who build infrastructure and tools that are important for everyone. So, I think that it's an interesting concept, but again, this is a lot of ADA that they're dealing with. And so it has to be a very well thought out approach in how they're doing things. Not everyone's going to agree, not everyone's going to like it, but maybe they increase this to what did they say, 20 pools, 30 pools, maybe they increase to 60 pools, and just have the amount of ADA that they're actually delegating. Right now they have 33 delegations, 652 million ADA, according to Pool PM. Now, Big Pay posted on X, did you know that users with 72 million ADA earn 30% more staking rewards on Cardano than average users? This only supports Cardano whales. However, he said that he has great news. He's designed a way to bring these extra rewards to every user. The code is already written, coming soon. So effectively, the 72 million ADA mark, this is the current saturation point. So that's the maximum you can have in a stake pool before you start losing rewards, right? Where the cap rewards at 72 million ADA. And so they're saying that users with that much ADA earn 30% more staking rewards, because the more ADA you have in a stake pool, effectively the blockchain should be choosing your pool a little bit on the more often side, because for producing blocks, because the whole idea of staking is to stake behind a pool, which kind of lets the network know that you're backing this stake pool to validate on the network, right? So the idea is the more stake, the easier it is going to be to produce actual blocks. And what Big Pay is saying, based on his data, is if you have 72 million ADA, you're going to earn 30% more than pools without 72 million ADA. And so this is why it's important that there is the ability for new stake pools to get these large delegations to help them produce blocks. You can see this stake pool right here is oversaturated. I think the stake pool we actually used to, they used to sponsor the channel. They're over 72 million ADA. So you can see they're at saturation point. So if any more ADA is added to the stake pool, they're going to get diminishing rewards, even if they're producing blocks. But you can clearly see here, they're producing more blocks than most of the other stake pools on this page, because most of the other stake pools on this page have significantly less ADA in them, staked to them, than the saturated pool. So I would believe that. But again, as we go through time, it's going to be much more difficult for stake pools to attract new stake. Because again, if you're in a stake pool and you're earning rewards and that stake pool is earning, producing blocks, why would you change your stake pool? So the only way to incentivize people to move their ADA to other stake pools and allow new stake pools to become leaders instead of just having incumbents, because keep in mind, when people are making money, they're going to be like, oh no, everything's good. We don't have to change anything. But these people are actually holding back the network because they don't want things to get better. They don't want to adapt, because the people who are going to control the network effectively are going to be these high producing pools, because they're going to be the ones with the economic resources to make things happen in the Cardano ecosystem. They're going to already have a community of users that are delegating to them, and they can expand their stake pool, ecosystem larger. So the only way to incentivize moving, well, one of the only ways, I don't know, I'm sure there's other ways that you can incentivize people to move their ADA. Maybe, once every 6 months, the blockchain resets and, stake that hasn't moved for over, a year gets pushed back out and it has to be redelegated. That way there has to be a human interaction with the wallet every once in a while, something like that. I don't know. It's just a thought in my, that I had about this whole situation, because new stake pools, it's going to, in 5 years from now, there's going to be no ability to create your own stake pool from scratch. You're not going to be able to attract that kind of ADA into your pool, especially if the price of ADA continues to go higher. It's going to make it, you're going to advertise on the Cryptoviser podcast, and people are going to have $10,000 in ADA, but $10,000 in ADA in 5 years, it's going to be like significantly less actual ADA than it is today, because the price is probably going to go up. But these are just my thoughts, my opinions, and strategies in the market. Make sure you guys do your own research. Let me know what you guys think down below in the comments of the video. Don't forget to give the video a thumbs up. Hit that subscribe button. That way you never miss a new video. And I'll see you guys tomorrow right here on the channel. Invest responsibly. Do your own research, and crypto on.